Okay, let's continue guys. So previous session in accounts and consolidation, we learned that how many steps? 8 steps. The step 8 was balance sheet and we had that magical step 3A. So previous class we basically learned how to do an entire sum exam oriented. First class I taught you logic. Second class with logic, exam what is important, how to get the answer. Now we are going to continue. This is the core guys, the 8 steps. Every sum will have only those 8 steps. Sometimes they will ask only step 4 for one question. Sometimes they will ask only step 5, goodwill for one question. Are you following guys? So either all steps will come for a 20 mark question or individual steps will come for, they will ask compute minority 4 marks. Clear? Now within these steps there are adjustments. What sums we did previous class, Virat, Anushka, illustration 10, 11 are basic sums where which gives the whole template. It's like giving you a trial balance, prepare financial statements in schedule 3, correct? But same trial balance if it comes with 10 adjustments, then each adjustment you have to make some changes. Like that now we are going to go into adjustments. Adjustments comes now each step will change. That's the beauty of consolidation. Again, the 3A is the magic table. All the adjustments will impact 3 and 3A. If 3A is correct, next few steps are clear. So you will spend a significant of time in step 3 and step 3A. These numbers, step 1, 2, 3, 3A, 4, 5, 6, 7, 8. Is it there in study mat? It's what we are writing for our convenience when we talk about consolidation. Now let's proceed to the next concept. I want you all to try illustration 3. Let's do the sum. Okay. I'll read the question. It's simple. It's simple. This is now independent sums, 4 mark, 5 mark sums that can come in exam. X Limited acquires 70% equity shares of Z Limited. Who is the holding? X. Who is the subsidiary? Z. As of 31st March 2021, super, at a cost of 70 lakhs. Amazing. Okay, that means cost of investment is 70 lakhs. The following balance sheet of Z Limited is given. They have given some assets and liabilities. Balance sheet will not tally because they have given extract of assets and liabilities. The following revaluations have been agreed, which is not included in the above figures. That means before consolidation or before acquisition, some revaluations took place. PPE increased by 20%, investments down by 10%. Are you following guys? This part ignore for the time being. Z Limited declared and paid 20% dividend on its equity shares, face value 10. Just ignore this for the time being. Assume it's not there in the question. Okay. X Limited purchased the shares of Z at 20 per share. Calculate goodwill or capital reserve. This is step number 5. What is step number 5? If you look at your notes, what is step 5 saying? Goodwill or capital reserve, cost of control is equal to cost of investment minus, what is it? What I am buying. For that English I want net assets of subsidiary company on the date of acquisition represented by holding companies share capital and reserves and surplus. Do you remember this guys? That means on the day what I got. In other words, can I say this is nothing but net assets on date of acquisition, which is my share, correct? So you have to find this and then find goodwill or capital reserve. That's it. The sum is that's all. 4 or 5 mark question. Please ignore this. I am striking this for the time being. Declaration of dividend alone you ignore it and do the whole sum. Can you compute guys? Please compute. Compute guys. What is the cost of investment? It's given. I didn't have to find anything, which is how much guys? 70 lakhs minus what I got only I have to compute. Correct? Cost of investment is 70. Where it's given? Question first line. Cost of investment. Dinesh, are you following? What you purchased, usually you will do share capital plus pre into percentage. Here we don't have that. So what you have to do? Find, how do you find that? How will you find net assets, guys? Asset minus liability into holding company share. That's it. Do that quickly, guys. Do that quickly. Asset, all assets I will add. How much is PPE? Will I take 120 or 144? They did revaluation. So 144 for PPE plus investments are down by 10%. So 55 minus 10%, how much? 49.5. No other adjustments, correct? That's it. Rest you add like that. Plus 70 plus 15, correct? This is my assets. So 144 plus 49.5 plus 70 plus 15 minus liabilities 90 minus current liabilities 50 minus debentures and liabilities. How much you are getting, guys? 138.50. Are you all getting this, guys, as net assets? Hello? Let's compute down. See, same answer. 138.5 is my net assets. Are you following? We have done this computation hundreds of times in purchase consideration computation and amalgamation. Asset minus liability. So 138.5. So I will go to my equation and write minus 138.5. How much you are getting, guys? Goodwill or capital reserve? Think logically. For something of worth 138.5, I paid only 70. So you got a discount. That is nothing but capital reserve. How much? 68.5. Oh, correct. You are right. So how many of you got 68.5? 68.5. That means what? This represents what you paid, but this represents 100%. What is holding company share of 138.5? You are absolutely right. How much? 70% they have given. So just one small alteration you have to do. 70 minus 138.5 into 70%. Correct? Because holding company share is only so much. So you are getting 70 minus 96.95 is what? So I bought 96.95 by paying 70. So my capital reserve is 26.95. Are you all following, guys? Understanding? So again, common mistake. Of course, I also did it. You also pointed out immediately. That's good. That's 70%. But along with me, few of you also made the mistake. But common mistake, class, we have to make mistakes. Kalyan following, guys. But now those recording students are seeing the study mat answer. Study mat answer will not match with this. Why? I ignored something called dividend. That only is the next concept I am going to introduce. Now before I go there, have you all understood what is there on the board here, guys? Everybody is clear? Now coming to the next beautiful concept. Forget consolidation for the time being, guys. Forget about consolidation. Today's class, the next set of discussion is only for this. Okay. Forget consolidation. I am just going to take you to a normal example. Okay. Those who studied group 1 old syllabus investment accounting will have a fair bit of idea about this. Those who didn't study investment accounting old syllabus, it's new for you. Sir, I am studying new syllabus first time. Most of the students here learn newly with me because investment account is removed from syllabus. We have only AS 13. That's a small chota standard. We can finish off in 2 hours. That one. Okay. Fine. Come back, guys. See, new syllabus, remember, amalgamation, consolidation, branch takes away so much time. And standards is the other side. In terms of exam weightage, amalgamation, consolidations will come in one bucket and branch, rest all standards will come here. 50-50 or 60-40. AS has 60, this has 40. But time consumption, consolidation, amalgamation will take double the time to prepare than all the standards put together. Consolidation, amalgamation, branch, time taken is 3x of other standards. That means a smart student will be clear with every accounting standard and additionally learn consolidation, amalgamation, branch. Are you following, guys? So first you master standards, then you come here. Now come back to this concept. Somewhere I went to AS 13 and took this. Now come back here. Let's take Yes Bank example, completely new example for you to learn the concept. Okay. Yes Bank beginning of the year had 1 lakh shares. Okay. End of the year also they had 1 lakh shares. They didn't make any new issue. In this 1 lakh shares, Rajaram had 20,000 shares for the whole year. Rajaram is the shareholder of Yes Bank. 1st April he purchased. He is the shareholder for the whole year. Yes Bank share price in the beginning of the year was, let's say, 12 rupees. End of the year, let's say it became 20 rupees. Okay. But they have not declared any dividend yet. Okay. He also wants the dividend. That's what he gets in hand. This is unrealized gain. During the year, company earned a profit of 30 crores. Okay. So they decided to pay a dividend of 10 rupees per share. How much, guys? 10 rupees per share. That means Rajaram will get 20,000 shares he has into 10. He will get dividend of 2 lakhs. What entry will Rajaram pass if he gets dividend? Bank account debit to P&L. Straight goes to my other income. P&L, how much? 2 lakhs. Are you following? It goes to my P&L account. Any doubts in this? No. Understanding of. Now what is happening next? Follow carefully. This is the normal scenario. But Yes Bank did not declare this dividend. We studied in Companies Act section 123, all of that. Dividend is declared after the year ending. Around the time of AGM, after 4-5 months only dividend will be declared and you will get the money. June, July, August. Correct? So, Yes Bank was planning to declare dividend in the month of July. But Rajaram in the month of April had some urgent financial needs. He wanted to buy a car or he wanted to go abroad for something. He wanted to start a company, so he wants money. Correct? So what Rajaram did, he will sell his shares. Correct? He needs money. So how much he will get when he sells in the month of July? Assuming year ending share price is around 20. Correct? So Rajaram will get 20,000 into 20, 4 lakhs. Correct? So he is happy. Yes, I invested for 12 rupees. My capital gains is 8 rupees per share. I took the money. I am happy. After Rajaram sold the shares in April or May, within 1 month, they declared dividend. Is it a surprise for him? No, it's not a surprise because every year they are declaring in July only, July, August. ITC is a company which declares highest dividend in India. They declare almost every year actually. Last 10-15 years, every year they declare in the month of July, August. That means it's expected surprise or unexpected surprise? Expected. So what he should have done? Waited till July and sold the shares. But he didn't wait. Why? He needed the money. So now after they declared dividend, Rajaram is going to Yes Bank and telling Yes Bank, who was your shareholder for the whole year? Me. You earned a profit of 30 crores for which year? That full year. Who was a shareholder that day? Me. This shares he sold it. Let's say he sold it to, he sold it to Sumaya. Okay. He sold it to Sumaya. Okay. Now, after selling it to Sumaya, who will get the dividend? Sumaya only will get, because in July, who is the shareholder? Sumaya is the shareholder in July. So, Yes Bank gave the dividend to whom? Sumaya. So, Rajaram is fighting. No, this dividend should come to me because I was the shareholder. Even though I am not the shareholder in July, the dividend is paid out of profits earned during the year. During the year, I was the shareholder. Like this, is making a statement. Give the dividend to me. What Yes Bank will tell? No, not for you. Yes Bank will tell, no, sorry. Just because I am Yes Bank, don't expect me to tell yes for everything. Dividend is not for you. Dividend is for whom? Whoever is the shareholder on the date of declaration of dividend. So, Sumaya only will get the dividend. So Radharam is angry now. What he'll do? He can't do anything with Yes Bank, because if he goes in the bank and creates trouble, means security guard is there. He is also not stronger. They will take him off and they will leave. So what he will do next? He will go ask Sumaya, you only bought share from me, give the money. What she'll tell? Get out from here. You also want hit what? So she will also send him to go. So now Radharam cannot get this dividend. So if you are Radharam, what you will do? Sir, I want this dividend. I can't keep shares till July. I need money. So what he will do? So when he is selling for 20 rupees is for the share price. Correct? So what Radharam will tell? See, you are getting 10 rupees per share as dividend. So while selling itself, who decides the selling price? Rajaram. So Rajaram will tell, now in the month of May or April, whenever he is selling, I will not sell for 20, I will sell for 30 and I will get 6 lakhs including dividend. Sumaya will pay. But why will Sumaya accept? Hey, I will buy from somebody else. Now that somebody else also are losing dividend. So all those somebody else's together will hike the price from 20 to 30. So the market itself, before dividend declaration, share price will go up. Because every seller knows they are going to lose the dividend, so the market reacts. So if you go look at the share market price, before dividend declaration, 1 month or 1.5 to 2 months before dividend declaration, price will spike. Because every seller knows they will not get dividend, so they will include the dividend with some assumed, we don't know the rate, they will take past history, he will add 10 rupees and sell at 30. So if Sumaya wants to buy, whether from Radharam or anybody else, she has to pay 30. So she will pay 30. Are you following? So now Radharam sold the shares, correct? His entry will be now bank account debit 6 lakhs to, no, first when he sold at 20, what was the entry? Let's write both the entries, guys, for me to give you. When he sold at 20, when he sold at 30. When he sold at 20, he got bank account debit 20,000 into 20, 4 lakhs. 2 investments, correct? He is releasing his investments out of his books. He bought them at how much? 12. I bought them at 12. So 2 investments, 20,000 into 12, how much? 2 lakh, 40,000. Balance 1,60,000 is profit on sale, capital gains, gain on sale, because 12 became 20. This is the entry if he sells at 20. But if he is going to sell at 30, guys, if he is going to sell at 30 rupees, entry will be bank account debit 6 lakhs. 2 investments will remain the same. It will remain the same because cost will not change. 2 lakh 40. 2 profit and loss gain will remain at 1,60,000. The extra 2 lakhs is getting is what, guys? Dividend income. Are you following? It's the dividend income. Sir, effectively this 3,60,000 goes to my P&L, but one I will categorize them as gain on sale, dividend. He is receiving dividend in advance, not from company, but from Sumaya. Are you following, guys? This is the entry the seller should pass. Are you following, guys? Now, come to buyer. Let's look at Sumaya. When Sumaya is buying, 2 cases. Sumaya is buying at 20 from Radharam without dividend. Sumaya is buying at 30 with dividend she is paying. She doesn't know because the market has inflated the share price. When she is buying at 20, she will write investment account debit 4 lakhs to bank 4 lakhs, correct? Even if she is buying at 30, she doesn't know the dividend breakup, unlike Radharam knows. So she will do investment account debit 6 lakhs to bank 6 lakhs. Are you following this, guys? This entry who's passing? Sumaya is passing in her books. Forget 20 because that's the old example. Now Radharam is selling at 30. So I am bothered only about on these values. For Radharam, this extra 2 lakhs is a dividend income. So for Sumaya, this extra 2 lakhs is also she paid for dividend. But she doesn't know the dividend, so she records this while buying. When she passed this entry? In the month of May or June or April, sometime guys, whenever Radharam decided to sell. So she recorded investment in her books at 6 lakhs. After 1 month, in the month of July, she is getting what? Dividend. When she gets dividend, she is getting 2 lakhs, 20,000 into 10. So she will pass bank account debit 2 lakhs, credit what? Credit P&L 2 lakhs as my dividend income. Are you following? Now, do you find something conceptually wrong? What is it? Invest, the share value is not 6 lakhs, it's not 30. It is only a temporary rise in share price because of a market dividend issue. The minute dividend is declared, share price will fall. So what will happen? In reality, if you look at the graph of a share, if dividend is going to be declared here, in reality for any company, share price will go like this. Because of dividend, it will go up. Again, it will come down and it will go like this. It won't be exact, but there will be a spike and fall. That's because of dividend. That means if you buy around this time, you will record investment at 6 lakhs and later it will fall back to 4 lakhs. That means, can I say 6 lakhs is not the cost of the asset or cost of investment, it's only 4. The difference is dividend. So what they are saying, when you get the dividend, it's not a gain for you. She can't take it to P&L because it's not a profit for her because she already paid for this. That means Sumaya didn't earn these profits because she was never a shareholder. She purchased the profits along with share, correct? So she never earned it. Only if she see, if this dividend is earned after she became shareholder, then it's her profit. This is something which was there when she was it was there before itself. So AS 13, accounting standard 13 tells, instead of crediting, you will credit investment and reduce my investment from 6 lakhs to 4 lakhs. Are you following? Because this is not my gain, it's not a profit for me, it's a reduction in my investment because I paid more. Now you reduce it. Are you following? She will not take this gain of 2 lakhs to P&L. Her P&L will not have anything. Adjustment happens only in investment. Why? Very simple. What goes to P&L is what I earned. Sumaya purchased the shares, let's say over here. Dividend is declared from the profits earned before she purchased. That means she didn't earn it. She was not the shareholder when the dividend or profit was earned. That means when she purchased shares, she paid for dividend. Colloquially in investment accounting in AS 13, we used to call this 30 rupees as share price included with dividend. So it's cumulative of dividend. The share price is cumulative of dividend. It's called cum share price. Have you heard of that term? Cum share price, it's inclusive. Are you following, guys? So this is the logic, sir. For this and consolidation, what's the relationship? This concept comes from AS 13 investments. Even though investment accounting is not in our syllabus, this logic is very much needed to go to consolidation. Now, same logic in consolidation. Keep your logic. Now, we understood between Sumaya and Radharam what happens. Now, come to consolidation. Okay. Let's take opening of the year 1/4/23. Let's say this is closing 31st March 24. Let's keep our Virat and let's say this whole company is the profits earned by Anushka Limited. Okay. Virat purchased this company only on 31st March, end of the year. So he paid, let's say, 300 crores to purchase Anushka Limited. Okay. Now, this 300 crores we did in consolidation, computation of, you compute what you pay versus what you got. So what you paid is what he got. If you remember the sums, we took share capital plus reserves, pre-reserves into holding share. That means we used to consider profits is what you paid for also. Correct? So Virat paid 300 crores, which is including for the pre-acquisition profits. Correct? In all the sums, the cost of investments paid includes two elements, net assets. The net assets is share capital plus pre-acquisition profits. Yes or no? That means, like how Sumaya paid 30 per share, which is inclusive of 20 for investment and 10 for dividend, Virat Kohli paid 300 for buying Anushka Limited. That 300 comprises of share capital and pre-acquisition profits. So you purchase the profits. Now from that profits, tomorrow if Anushka is declaring dividend, Virat, instead of writing bank to P&L for dividend, he will write bank to investment. Let's say Anushka declared dividend of 10, investment value instead of 300 will be reduced by 10, it becomes 290. Are you following? Same logic. I spent so much time for the Radharam example, same analogy over here. Virat is paying 300 inclusive of profit. Now when he is getting back that profit in form of dividend, reduce the cost of investment. That means effectively I paid only 290. In other words, you paid 290 for share capital and pre-acquisition. A part of that is coming back for you, so I am reducing. Are you following, guys? Understanding? So this depends on whether the dividend is declared from profits earned before acquisition or after acquisition. Imagine Sumaya only for first year she will do adjustment. For next year, no, because she was also shareholder. That's her income. Correct? Same way here, if Anushka is giving dividend from profit earned before Virat came into her life, then you have to reduce cost of investment. If Anushka Limited is giving profit after Virat came in, then it's a profit earned together. So it becomes actual profit. Are you following, guys? So now go to your steps. Go to step number 5, which is cost of control. Computation of cost of control. Go to the step 5, guys. I'm not going there. I know exactly what you wrote. Go to step 5, cost of control. First you wrote net assets of on the date of acquisition represented by holding company's share of share capital and reserves minus cost of investment on the date of cost of investments. That time I told leave 2 lines. That is for reducing this 10. Because that time if I told you, you would not understood. So in cost of investment in the steps, write down less. In cost of investment in the same step 5, cost of investment in our example 300 less, what will come? Not dividend. That's the makes the mistake. Pre-acquisition dividend. Dividend declared from pre-profits, not from post. Are you understanding, guys? Less pre-acquisition dividend. Less what, guys? Pre-acquisition dividend. Be very careful. Which dividend you will reduce here? The dividend you earned, which was paid by subsidiary from the pre-profits. Less pre-acquisition dividend. Net amount only you will compare. You will compare 290 only. Are you following, guys? Everybody with me? Now go back to this question. This question what we just did, where you got 26.95. That is not the correct answer because it was correct if this line was not there. Now read this line. What it says? Z Limited declared and paid a dividend of 20% on its equity shares on 31st March. That means on the date of acquisition, I paid dividend. That means full dividend is from pre-acquisition. Can you please reduce from here, from this which guys? 70. You should also reduce dividend. Can you compute guys dividend? You should compute. It's given, percentage is given, everything is there. Not straightforward guys, don't expect straightforward. How to compute dividend? It's very easy guys. Got it? One extra step, that's all. Compute dividend fast. 7 lakhs. Very simple. What is dividend? Paid up share capital, nothing, see, paid up share capital into dividend rate, correct? Dividend rate is straight away given at how much? 20% on paid up share capital. How to find paid up share capital? How to find? Cost of investment is 70 lakhs. I paid 70 lakhs for buying a share of worth 20 per share. So your computation will become like this. You paid 70 lakhs for one share of 20. So how many shares? 3 lakh. They told face value is 10. So into 10, 35 lakhs into 20% minus 7 lakhs. That's it. Are you following guys? Understanding a little bit, you have to think guys, come on. Are you getting it? 70 lakhs is the value I paid. For each share I paid 20. So divided by 20, you will find number of shares into face value. What if that number per share value is not given? You will assume it to be 10 face value. Don't do that, all of that. Okay. Fine. So you will get dividend of 7. So 70 minus 7 is how much guys? So 70 minus 7 is 63 lakhs minus 96.95. If you compare, what will be your capital reserve? 33.95. Let's check the answer. I don't know if it's correct. Yeah, it's perfectly correct. 33.95. So now your study mat answer will match because they reduced 70 lakhs minus 7 and they compared it. Are you following guys? Understanding logic? Logic is you need to compare what you paid to buy the business. What I paid to buy the business is only 63. Net of what I got back. Sir, why I am reducing 7? You got it back. You paid 70, but you got back 7. So what's my net cost? 63. Sir, I paid 200 rupees for auto, sir. My office gave 100 rupees reimbursement. What's your net cost? 100. So I paid 60. This reduction not for all dividend. Only dividend from pre-acquisition. Are you getting the logic, everybody? Kalyan, understanding? That's it. That is this sum. Simple sum. 5-mark question. They have tested multiple times in the exam. Let's go to illustration number 1. 1 we finished everything, but that time I told you this third part I will do it later. Correct? So illustration 1 we computed minority interest, we computed goodwill or capital reserve in all the 4 cases. Now you read this third line, you will teach me how to do it. This is third line is, if you look at this, minority interest is step 4, goodwill capital reserve is step 5, next is step 6. That's it. What is step 6? Amount of holding companies profit in consolidated balance sheet assuming its own profit losses 2 lakhs. What you should do? How to compute this? Step 6, what you did? What plus what is step 6? Holding company's profits 2 lakhs plus post acquisition share of subsidiary withholding. How to find that here? I will take which profit? Only date of consolidation. Correct? What is the post acquisition profit? You compute guys. It's given straight away. Like how I started one sum 30 minus 10, 20 we found. Here When I acquired, profit was 50. Now it became 70. So what's post? 20. Are you following? When you acquired, it was 30. Now it became 10. So negative 10. So what will reduce? Are you following, guys? When I acquired, it was 20. Now it is 20. So nothing. When I acquired, it was 40. Now it became 55. So what is post? 15,000. Come down. In case 3, where is that? Look at this. In all the cases, your P&L is 2 lakhs. 2 lakh plus what? Look at this. We found this. 20 we found. Negative 10 we found. Nil and 15. But this is the whole post. What's my share? What is the holding percentage? In this question, holding percentage is, they are given 4, 90, 85, 80 and 100. I will multiply with those respective percentages. Column 1 and 2, 4 I will get. This is my answer. This I will add with what, guys? Plus 2 lakhs. Are you following, guys? Now are you understanding? That time I couldn't do this because I needed to explain a lot of things. Now it's very simple. This question, illustration 1, came for, I think, 5 or 10 marks in the old syllabus last exam. Sir, 30 sums are there, sir. They asked illustration 1. That means those who attended class for first day and left got the marks. Okay. Following, guys. Understanding, Dhaneshwar. Clear? Genuinely understanding. Okay. Now, I don't want to teach anything new. Just practicing. Just sums. I'll tell you which one to do. I want to go to practical questions behind. Totally, I think we have 16 main illustrations. Next class onwards, we are going to accelerate and do sums, guys. That's it. You know, consolidation, it's about applying those 10 steps. Let me go to leave MCQ and all. Practical questions. 1. Super. We can do both the sums, guys. First to do practical question 2, guys. For you guys, it's question number 18 or 19 now? 17 now. 7. King Limited. 7. Really? Okay, question number 7. 7. I want the regular batch students to give me the answer. Yes, 17. Okay. So I'll just tell you, ICAA question, it is practical question number 7. In the book you have, it's question number 17. As per this soft copy, question 2. Okay. Different sources you guys are watching, so I want to cover everybody so you don't search. Those who are watching will know which source you are, so you don't think about who are the other students. Okay. Question number 2. You have exactly 58 seconds to give me the answer. Compute goodwill or capital reserve. 58 seconds. I am not going to solve this sum. Just now we did it. You can do it in 58 seconds. If you are done, put your hand up. I want you to compete with each other, guys. Do it. 5-mark exam problem. If you are done, put your hand up. Recording, I will tell you if somebody finished so that you know you have to improve your speed. Sir, why are you comparing? Of course, I will compare. Examiner is doing that, so you also do that. Recording, ignore what you are seeing. I am just transferring to other side. Yeah. Do it fast, guys. Come on, guys. Calculate goodwill, capital reserve. Same as previous sum. In fact, much easier. Dividend is not there, correct? Ashwin finished. Come on, Janeshwar, strike his notebook. He didn't put the hand up. Come on, guys, only 10 seconds left. Don't do an exam format presentation. Rough working. Just get the answer. Exam you have to write that full table. Finished, Radharam. What's the answer? Capital reserve of 130. I don't know if it's correct, guys. Please give your answers. It's okay. It's okay if it's wrong. It's completely okay if it's wrong, guys. Yes, Rahul got the answer fast. Sumaya, yes. Capital reserve. 53.19 now. 53.137 capital reserve. For you, 53.9 is what? Goodwill. Okay. 53.9 goodwill. I don't know what's correct, guys. Santosh online says capital reserve 53. Okay, 53. Okay, everybody on capital reserve. Online, Aishwarya, Santosh, everybody are saying. Ramya has left the meeting. Next, Padmanabham got 54.1 new answer. How many of you? 53.9 capital reserve. How many of you? 137 capital reserve. Even Radharam changed this answer. So I will strike it off. Others, do it, guys. I will need just 15 seconds to solve. Okay, let me check. We don't have time. 30 sums. I can't wait in every sum. Quickly, guys. What you paid us? 140. Do you have pre-acquisition dividend? No. So come down. What I paid is 140. I have to compare with net asset, guys. Asset minus liability with revaluation is given over here. Straight away, they are doing assets revalued, investments revalued, then minus all the liabilities. You will get net worth of 277. Common mistake will be, sir, I forgot to take 70%. Who did that? Forgot to take 70% means you will get 137. I told you that's why the wordings are so carefully drafted. Holding company share of net assets. When will this not come? If I have 100% in subsidiary, no need. So 277 into 70%, 193.9. Compare with what you paid. So 53.9 is capital reserve. I don't know how Padmanabhan got 54.11. Somewhere rounding off mistake or some computation. I hope it's sorted. Clear, guys? He said, oh, he changed his answer. Calculator problem. Oh, calculation problem. Okay, fine. Got it, guys, everybody. Online students, I'm bending now. I'm trying to see chart. Okay. Done. Easy, guys. I should have done this sum first. But that sum also without dividend. If dividend comes, reduce cost of investment. These kind of sums can come where? MCQ. 2 marks. What is this? 2 marks MCQ. What is there in this? They will give 4 options. Like how Radharam told. 137 one option. 53.9 one option. You have to pick. Okay. See, again I'm telling you. MCQ don't do additional prep. You should just do additional practice. Okay. What is the practice? If your preparation is good, MCQ is a byproduct. Do you know ICA released that MCQ tool? Go to that. Before we go to next sum, very, very important, guys. Illustration 1 will do. This was actually one of my ideas. I thought I will do a startup idea. I started building a team to make MCQs using AI. I discussed in one of the classes. I think ICA heard me. They have launched the MCQ tool in the website of ICA for students using AI. Very good. A student can log in. I don't know how many of you know that, but start using this. Student can log in, go choose the subject and choose the chapter. Sir, I am choosing subject as advanced accounting, choosing chapter as consolidation. Can you choose multiple chapters? I don't think so. It's there. One chapter you can choose. Then you can choose easy, medium, difficult. One drop down will come. Then you should click on. That's it. Generate. Oh, not yet ready. Easy, medium is there. Difficult is still exam. They will give you next. That's it. Then submit. That's all. No other. So you choose difficult. So then you difficult is there. Okay, leave it, guys. Difficult will come soon. Okay. As of the day of recording, it's not there. Leave it. So you click on generate. They will give some set of MCQs. How many MCQs? 5 or 10, whatever, guys. You go explore that. You will get some MCQs. You can give the answer. Immediately you will get the answer. So who should do this? Whenever you finish chapter, you have to do it. What is the additional prep you have to do? Nothing. Remember, MCQ is a byproduct of your preparation. If you know costing, byproduct, you don't plan for it. It comes. If you are conceptually strong, theoretically good, MCQ will know the answer. As simple as that. If you mug up, sir, cost of acquisition minus net assets, positive now, goodwill, negative now, capital reserve, then gone, negative mark only for you. Now, MCQ no negative, guys. Illustration. One last question for the day, most probably. Let's do this. Hemant Limited. Okay, practical question 1 for you guys. Question. Tell me ICA question number. ICA question 6. ICA 6 for you guys question 16. You get the flow. For one set of students, question 16. ICA practical 6. For another set of students, it's in the book. If you have this book now, question number 1. Hemant Limited purchased 80% shares in Power Limited Super on 1st Jan for how much, guys? 2 lakh 10. The issued share capital of Power on 1st Jan is 1 lakh 50. Share capital is 1 lakh 50 and the balance was balance in the profit and loss account 90,000. What is 90? Pre or post? What is 90? Think, read. Pre. On the date of acquisition, balance in P&L is 90. So it is pre. During the year ended 31st December, Power Limited earned a profit of 30,000 at the year end and declared and paid dividend of 22. That means during the year I earned profit. What is that? Post. What are they asking? I can even do consolidation for this. What are they asking? What is the amount of minority and compute goodwill or capital reserve? They are asking step. But for doing step 4, you should do 3 and 3A. That should be your working note. Are you following, guys? Let's analyze the reserves. Can you do it, guys? Can you try it? Okay. I will also keep the workings ready. During the year ended. So I am assuming 30,000 is the current year profits. How much? Goodwill 18. Vignesh already gave us the answer. Compute, guys. That's it. It's very easy. You don't do step 3 and 3A, guys. That's in a big sum. Now you have to apply logic. First you do anything, whichever can be done first, absolutely no problem. One is for goodwill, one is for minority. Give it a try, guys. I'll give you 1 minute time. 1 minute is enough. Already Vignesh gave us the answer. Others try it. Both are independent working notes. Do it separately. Don't get confused. What you paid against what you got, separate. Minority is separate. Don't get confused. Do them separately. See if you're getting the answer. If you get the answer, put the hand up. Did you get the answer, guys? Okay, now I'll quickly do it. Let's check first. The goodwill is easy. What you paid, guys? 2 lakh 10,000. So I paid 2 lakh 10,000. Cost of investment, correct? What I got? Share capital of 2 lakh. No, I got share capital of 1 lakh 50 plus pre of 90, correct? So I will compare with 1 lakh 50 plus 90,000, but did I get the whole thing? No, my share is 80%. So it will be 2 lakh 10,000 minus 1 lakh 90. So for something worth 1,92,000, you paid 2,10,000. So goodwill is 18,000. Are you following? Are you understanding, guys? In exam, when you're doing this, please write the English. Sir, what English? What does 2,10,000 represent? Cost of investment. Very, very important. Minus, what is this? Share capital plus pre-acquisition profit on the date of acquisition into holding company's share. That equation, what I gave you in step number 5, I declared it in English. That is mandatory, guys. Otherwise, examiner will ask, what you did, I don't understand. Are you following? So, goodwill is 18,000. That is the answer. Goodwill is 18,000. How many of you got this? Understood now? Understood now, guys? This step 5. How to compute minority? Simple. I gave you multiple equations. Share capital plus pre plus post into minority share. That's it. What is share capital? 1,50,000. What is pre? 90. What is post? 30. They gave in the question. They gave in the question. So into 20%, how much? 54,000. This is subject to dividend. So this is subject to dividend, guys. Okay. This is, if dividend is not there, you get answer as 54. Now follow. They have earned a profit of 30,000 at the year ending and declared and paid dividend of 22,500. So what happens now? This is not going to change. The pre will remain the same. That means 1,50,000 plus 90 will never change because that is the value on the date of acquisition. So 1,50,000 plus 90 into 30% is how much? If I have to break this down, it will be 1,50,000 plus 90,000 into 20%. How much? 48,000. Sir, I want to get answer from 54. Easily you will get. Answer is 54,000. What the company has to pay minority is 54. They already paid them dividend. How much? 22,500. But in that my share is only 20%. Correct? So how much is that? 4,000. So out of the due, see, minority interest in balance sheet is coming in liability side. That means it's payable. So out of 54, I paid. So you will get 49,500. Or in other words, sir, I want to compute how book has computed. This you all understood till 48. In balance post 30,000 is the profit payable to you, but I already paid you 22,500 dividend. So net profit available with me is how much? What is the post available? So 7,500 only is post because the rest is paid. 7,500 into how much? 1,500 plus 48,000, you get 49. So if you know the logic, I can do it anyway. Find 54, reduce dividend share, or normally you find 48 plus available post share, 49,500. That's the answer over here. Are you understanding? Lakshita getting it? How many of you got answer for this? So you didn't teach to reduce dividend. I told you take post acquisition profits on balance sheet date. Post acquisition profits on balance sheet date will be 30 minus dividend paid. What is remaining is only 7,500. That's why here they would have done this minus this. They added everything and they did this. Before dividend, see, beginning of the year they did and end of the year. This is before dividend. This is before dividend and before current year profits. Are you following, guys? Understanding? Anybody has a doubt in this sum? Hello? So illustration 1 is done, 2 is done. This sum, where you saw this? Guys, come on, guys. Where you saw? Illustration 1 of any book, whichever book you have. For you guys, it's ICA book, question number. ICA also 1 now. ICA 1, question 8. For you guys, what book? Ashwin, Daneshwar. 80 now. 18, 8, illustration 3, whatever guys, okay. This sum, should we do it again? So this is going to be a homework. What they're asking you to compute, determine minority interest only. They are not even asking goodwill. You can compute still. I will do for one case if you want. How to compute minority interest? If it's 90%, quickly on the face of it. Which date? Acquisition or consolidation? Minority interest is which day? How many of you consolidation? How many of you acquisition date? Acquisition date only goodwill or capital reserve. Step 5. Minority is what you have to pay to the minority. Every day it will change. So on date of consolidation, nothing but share capital plus this into 10%. So 1,50,000 plus 85 is 2,35,000 into 10%. 23,500. First case answer is 23,000. Stupid fellow, simply compute on date of acquisition. No need. Question, did he ask? No. Oh, on date of acquisition and okay, fine. I am the stupid fellow. Okay. But if they ask on date of consolidation, question is silent means what's the answer? Consolidation. Since he asked acquisition, 1,50,000 plus 75 into 10%, 2,25,000 into 10%, you get 22,500. Like that, 4 cases, 5 mark question that has come in the past, I promise. See the whole syllabus question paper. There are questions like this. Okay. Illustration 3 also is done. I think that's all. Rest of the sums are big sums. So we are now done with the base. This is like, have you understood till here? That's it. If you understood till here, after this it's only each sum with additional adjustments. Remember to maintain library of adjustments. 30 sums of consolidation. Even I can't revise day before exam. In these 30 sums, there will be some 5 to 7 sums with key adjustments which are important. You will add it to your library. So library of adjustments, very important guys. How many of you are maintaining it? Sumaya 1, then Lakshita did it, no half. Here, this batch, nobody. First class, what I told? First class, the day I took AS4, what I told? I challenged you that day that nobody will prepare, only 2 or 3 will prepare in the whole class of 50, which is the ICA pass percentage. I don't mean to put anybody down guys. Now you tell me guys, exam is just, it's getting close. Will you have the time to revise 30 sums of consolidation before exam? But if you have the library, what you can do? Revise, that's it. So who has to, you still have time. I don't know when you are watching this. If you are watching this 1 week before exam, don't do library. I don't know when you are watching recording, but if you have substantial time, every day make your library of adjustments. For those who don't know what's library, all the key adjustments in every chapter, put it in a separate index in the front of the book so that day before exam, instead of revising 30 sums of consolidation, you will revise one big sum with 10 adjustments. That's it. Are you following guys? In simple, you don't have to revise this sum and this sum, correct? Rather, it's already part of previous. So one of these you revise, it's enough. That you should mark and keep. Done. With that, we are done with consolidation for the day. Thank you guys. Any doubts here? No? See you all in the next session. Thank you guys.